For anyone looking at still growing their portfolio that's getting a bit more confidence back in the market, like you're saying, from some of these pauses and with a little bit more of the uptick that we're seeing in some areas, what do people need to consider with land tax? And if you're cool with it, let's fly through this state by state as far as thresholds or anything else that they need to consider, maybe even purchasing in a trust. So do you want to start with Victoria?
Yeah, start with Victoria. So we can see here we've just got a little bit more time before the new Victorian land tax threshold kicks in. So till the end of 30 June 2023 calendar year, we've got a land tax threshold of $300,000.
And what does it change to then?
It changes to $50,000. So between $0 to $50,000, there's no land tax.
They may as well say zero.
It may as well say zero. And by memory, between $50,000 to $100,000, it's a $500 surcharge.
Okay.
And between $100,000 and $300,000, it's about a $975 surcharge.
And what if you've got it in a trust?
The threshold in a trust has always been relatively low in Victoria. It was about $25,000. Now I believe it's dropped down to about $10,000. So you'll be paying land tax pretty much most cases from $1 of buying a property inside a trust.
So no real protection there.
No real protection. Yeah, New South Wales and Victoria have always been probably more aggressive on the land tax front for entities.
Yep.
Compared to most of the other states, which it's pretty much the same as an individual threshold. So generally speaking, where possible, we really try to absorb as much of the land tax threshold as you possibly can in an individual's name.
Yep.
And then all bets are off after that, trusts come into play.
What about South Australia? Because I remember, I think from memory, it was 2018, everything changed and you couldn't hide in a trust anymore.
Yeah, that's it. So individually, South Australia still holds quite a strong threshold, $534,000.
Okay.
But from a trust perspective, you've got to anticipate that you're going to be paying some land tax again from pretty much $1 with inside a trust.
And just for anyone that's super new to property investing, when we're saying land tax, it is literally the land value, correct?
Only the land value. So a lot of people think that land tax is payable potentially on the property's value, but in most cases, no, it's not. The land value is what they're assessing it on, and you can find your land value by getting an update from the state commissioner.
Yep.
For land values, or you can get your land value from your council rate, which is your rateable value, and that's going to give you a pretty much good understanding of the potential land tax you're going to be paying. Most people would receive letters not long after buying a property. Could be 12 months, 18 months, 24 months, with just a letter saying what your land value is, and most times they'll automatically include you into their system for land tax, and some other times you can hide under the radar, but it always catches up with you, especially if you sell or over time. They'll pick you up and then they will back charge you the land tax with potentially some interest and penalties as well.
Oh, sounds wonderful. All right. Well, what about if we go over to WA? Perth seems to be the hotspot at the moment.
Perth is a hotspot, yeah. So I'd probably say from my client base, which are very active in the property market, I would say a large percentage of buyers agents and a large percentage of investors are buying in Perth at the moment. The land tax threshold individually is relatively low, $300,000.
Okay.
But they've got the luxury that a trust does receive the same land tax threshold as an individual.
Right.
Of $300,000. So what people are doing is once they're exhausting their potential threshold individually, they're going in a trust. And as long as you're creating a new corporate trustee per trust, you can continue to get a new threshold every property you buy in, if it's in a new trust, that is as well.
Right. Okay. So what if someone buys, let's say, two lower value properties and they're both, I don't know, $350,000 each, and let's say they got a $200,000 land tax, land component to them. Does that mean that they'd pay then what, $100,000 land tax? Because then if their collective in one trust was $400,000?
Yeah. So there'd be a land tax percentage that they'd be charged above the threshold of 300. So there would be a percentage of land tax that they're going to be charged on that $100,000 increase above the threshold itself. So a way to mitigate that is obviously buying a new trust. But you need to work out the pros and cons, the cost versus benefit analysis. Because if you're establishing a new trust, there's the establishment cost and the ongoing running fees, which could be lesser than the additional land tax that you're paying. So it's important to understand that.
What are they normally roughly? I'd imagine they change a bit.
From the threshold perspective or the cost perspective of a trust?
Cost perspective of the establishment and the running cost.
Depends on the establishment, depends on the structure that someone's going to be utilising, whether it's an individual trustee or corporate trustee.
Yep.
And the running cost depending on what they're doing with inside the trust itself. It's very hard to say what the cost is because some people will do a lot more of their own work and some people leave it purely up to the professionals to take care of all of the bookkeeping around it, all of the accounting compliance.
Yep.
But you've got to expect, from a range perspective, anywhere between $3,000 or $4,000 from establishment point of view, if done correctly. And from an ongoing compliance point of view, anywhere between $1,000 to $2,000 is pretty much the going rate.
Okay, so you really do have to weigh up, like, what am I saving versus what am I spending?
Correct. And that one, the establishment cost is one-off in nature. It's more the ongoing compliance fee.
Right.
So I think that's very important. It's that cost versus benefit analysis before going into a new entity.
Now, an area no one talks about, we even did an episode not long ago, is Darwin Dead. What about the NT? For anyone that's like, well, I own property there, how does land tax work for me?
No land tax threshold in the Northern Territory, very similar to that to the Australian Capital Territory as well. I'm not a history buff around states and territories and why they are.
Yeah.
But the common thread that you can see is that the Australian Capital Territory and the Northern Territory, there is no land tax that you pay. And it could be because of its territorial status.
And I know we're going to talk about ACT in a second, but is New South Wales, do you know, is that the same as ACT where it's like leases, or do you actually own it? Or?
No, we own it. We own it. We pay stamp duty in New South Wales compared to the conveyance duty in ACT.
Did I say New South Wales? I meant Northern Territory. My mistake.
Good question. I think in Northern Territory you do own the property. I don't think it's similar to the Australian Capital Territory where it's Crown land under a lease.
Yep.
I just think that's a way of them promoting a lot more investment in their state, because typically Northern Territory hasn't had a huge amount of investment, although it did go through a very big cycle in the mid-2010s, that 2014 to 17 mark.
Yeah, Darwin went crazy.
It went crazy, and then it really stopped. So it's a market I haven't had a lot of research personally myself. I haven't got a lot of clients that have purchased in Northern Territory personally, but I have seen some people do very well over time there.
Yeah, I think the rough outcome of our episode of Is Darwin Dead is it's not dead, but it's in a coma. It could come back.
Could be, could be. But like all states and territories that we have in Australia, they'll go through their own cycles.
Exactly.
And it's a matter of, if you're going to try to time the market very well, if you can do well in Northern Territory and time it to perfection, there's a lot of money you can make.
And what about Queensland? What are we looking at there?
Queensland, $600,000 individual threshold for an individual. So they've always been typically for a long time very lenient towards investors, although you'll see there in Queensland that they've had a $600,000 land tax threshold for a very long time, compared to a state like New South Wales, which has really indexed it up quite a bit to give people that breathing space, as the land values have really increased in New South Wales over a longer period of time.
But I see that if someone's got it in a trust, then that drops from 600 to 350.
Correct.
Right?
So a trust gives you the option, the ability, I should say, that it does receive a $350,000 land tax threshold, which does help with obviously holding a property in a trust in Queensland compared to, say, New South Wales, where there's no threshold in a trust.
Now, for anyone, and not to turn it too political, but for anyone that's maybe a little bit nervous now with Queensland, considering what Chook was going to do last year, what are your thoughts on that potentially actually like taking effect again in the future?
Look, like negative gearing that happened in the late 80s when they took it away, I think sometimes when political parties try to implement too much red tape and bureaucracy into legislation like that, I think sometimes you'll find there's a bit of a backlash. But given the circumstances that we're currently in, with significantly less rentals than the people that we have out there that want them, I don't think they're going to play around with the properties with the property supply by increasing costs too quickly. I know that Victoria has done it with the reduction of land tax, but they're in a state which is far indebted than most other states in Australia and territories, that is. So I think they've tried it. They got the backlash, and I don't think it's going to pop up anytime soon. If anything, I think you might find over time Queensland's land tax threshold might increase, just because they've had such a large increase in their property values over the last, say, 3 to 5 years.
Let's try and make things a little bit more attractive.
Need to, because what we are seeing at the moment, and again, I'm not a research scientist in terms of data regarding property. I'm really just one of those people that have such a large amount of clients doing so many different things. I get a bit of a feel on a micro level. Queensland definitely was a very big hotspot for the last couple of years.
Yeah, it did very well.
It did very well. A lot of demand in that area from investors. I've seen Queensland over the last 13, 14 years. I was investing there during that period of time as well. And when it was a hotspot, it was a frenzy. Lots of people from the southern borders of Queensland, and we're talking places like New South Wales, Victoria, South Australia, and even probably WA investors, they were all buying a lot of properties in Queensland sight unseen. And then it just dropped off the perch in, again, that mid-2010s, that 2013 through to 2017. Quite stagnant. Rents were actually coming down. Prices were coming down, rents were coming down. And then obviously during COVID, large portion of interstate migration went into Queensland. Rents started to increase and property prices started to increase quite drastically. But from what I'm seeing on a client level, I'm not seeing a lot of clients at the moment buying property in Queensland. A lot of investment from what I'm seeing is actually on the western side of the country, which is WA. A lot more people are chasing ultimately the lower price properties with the high yields. And what that's maybe leaving is maybe a slight gap in some places in Queensland where if you are looking, it potentially might not be a bad option because you're not having the amount of frenzy, especially that's brought upon from a lot of investors compared to that in WA. Now, when I started investing in WA back in 2018, I was looking at properties, Todd, where they're on the market for over a year.
Yeah.
And the agent was just saying to me, Jeremy, offer whatever you want.
Just please buy this.
Just offer whatever you want. We've had this property in the market for 1 year.
Yep.
The person just wants to get rid of it. And when I was buying, their prices were relatively cheap and the negotiation was very much favoured for the buyer. Now looking at WA, there's no negotiation. And there's many properties now which are selling above listing price. So one might argue that that's really good conditions from a selling point of view.
Okay. And so from a land tax point of view then, there's also some favourability with Queensland. You don't think that there's the chance that they're going to, or there's always a chance, but you don't think it's very likely that they're going to change it. But as far as WA is concerned, we've also got some good benefits as far as holding land tax-wise in a trust.
Correct.
But the competition's a lot more fierce because now all of the heat's over in that market where it hasn't been previously.
Correct. And we might see that a lot more properties will be, from a land value perspective, valued higher.
Yep.
And there potentially might be some land tax that people need to be starting to pay over a number of years.
Okay, we're speeding through the last three. Your home state, New South Wales.
Now, always indexed. It's always gone up, and it looks like it's gone up pretty much quite regularly for the last 15 years.
Yep.
Land values there have been going bonkers for quite a while. 969 individually. One might argue that one property gets you over that threshold straight away, but generally speaking, I always try to encourage clients to absorb that land tax threshold because it becomes a very big expense very quickly. So many people don't understand that there's actually a penalty sometimes when you're buying properties 50-50 in New South Wales.
What do you mean? Like land tax wise?
Land tax wise, yeah. It just hasn't, it's not common knowledge, and it's not something that accountants generally pick up or even buyers agents, that is. It's just something that we've researched over a number of years. But to put it quite short, Todd, if you're buying a property 50-50, it's seen as a partnership.
Yep.
And that partnership receives a threshold of only that $969,000.
Okay.
So, if you've got one property in that partnership of 50-50, 60-40, whatever it may be,
you've both used up your threshold.
You pretty much both use the threshold of that partnership. So you'd be paying land tax if you were to potentially buy a property in your own name or potentially buying a property in your partner's name. So I actually encourage people to think about, well, yes, you can go on a loan together if you're spouses through spousal benefit, but buying a property 100% in your partner's name and buying a property in the other partner's name will ensure now that you've got two properties where you're potentially not paying land tax, as opposed to on that second property in the partnership, you're paying land tax prematurely.
So, but you can both be on the loan though, just not on the document, like the deed.
Correct. Not on the title, that is.
All right, what about ACT?
ACT, no land tax because you don't actually own the land.
What do you mean by that?
You don't own the land. It's on a crown lease. So when you essentially buy a property there, you don't pay stamp duty on the transaction. It's called conveyancing duty. And a little known fact, when you purchase a property in Canberra and it's for investment purposes, that conveyancing duty is tax deductible.
Yeah, right. Okay.
So if you're spending $40,000 on purchasing that $1.1 million property, for instance, in ACT, and there's a conveyance duty there that you pay, you can claim that as a tax deduction.
As I'm assuming that's not depreciated. That's
not
just
depreciated.
Like bang off your tax.
Straight bang off your tax. Not capital cost base like all the other states that we need to do.
Okay. So you don't own the land, but you get a pretty good side benefit there as a tax deduction.
Correct. Only as a one-off, obviously, because the conveyancing duty is just as part of purchasing the property itself.
Yeah, right. Okay, so no land tax. And what last on the list, Tassie.
Tassie, it's been $100,000 for as long as I can remember. For individual, $100,000, and for trusts or absentee entities, annual threshold of $100,000 as well. Tasmania hasn't really seen a huge amount of growth prior to what it has been over the last 5-6 years.
Yep.
So I don't think they saw the need to increase the land tax threshold there.
Surely there must be now.
There definitely needs to be. The land values there have probably increased more than double in the last 5-6 years. So I think that needs to be reviewed and needs to be reviewed quite quickly because there's a lot of people which are paying land tax and that rate hasn't been indexed for a long time.
Jeremy Iannuzzelli from KHI Partners, mate. Thank you so much for jumping on the show. I'm sure we'll see you again soon.
Pleasure, Todd. Thank you.